In this session, we will look into how we can scan or screen for stocks with very high implied volatility. Before diving into this topic, let me give you a short reasoning behind we look for stocks with very high implied volatility. So, for option sellers, the edge that we have over option buyers is the way high premiums we get when there is a high uncertainty in the market. This is where the implied volatility. This is not the real volatility. This is the implied volatility is very high. That means the premium that we get when we sell the options will be very high compared to a normal scenario. An example would be when the Fed is about to announce the change in the interest rate. At that time, if you look at the option values, this will all options of all the stocks. It will be very very high. It's because of the uncertainty in the market, because of this impending event. So the here in this case, the change in the interest rate. So but this is just one event, but there are other events that can drive a stock's implied volatility. It can be earnings, it can be some other events that happens in the company, a new product is launched, and so on. So option sellers, what they do is they identify stocks that has very high implied volatility, or the implied volatility is there is a high chance that implied volatility will go up. So they will identify these stocks and sell options for these stocks. So in this session, what we are going to do is to screen or the scan the market for stocks with very high implied volatility. So I'm here. I'm using TWS Trader Workstation of Interactive Brokers. Here I will show you how to scan for it. Yeah. So if you have not seen my previous videos, have a look. There I will have explained the different tabs that I have: portfolio tab, graph tab, option chain tab. Here we are going to create a new tab for screening, or let's say high implied volatility screen. Okay. Okay, so we created a tab here. What we will go do is we'll go to uh, here we have an option called scanners. Where are the scanners? Scanners here, mosaic market scanner. Okay, so here we have a scanner. What I'm going to do is I'm going to create a new scanner. Let's say we give a new name, uh, high implied volatility scan. Okay, so the product stock, region US, exchange, just took, it's okay. Type, don't select anything here. Here we are going to take the filters. So here, we don't want stocks that are penny stocks. So we need maybe uh, $10 minimum. Change doesn't matter much. Percentage change also doesn't matter. Now we go to options and we select options with here we have 52-week implied volatility ranking, and here we filter it for when we say high implied volatility, let's say from 60 to 100. We also need stocks that are that has a very good market cap, so that they are stable here. So I will say I took the market cap. I took say 1 billion, 1 billion. So when I select 1 billion, you can see from this graph we are talking about only a smaller portion here. Yeah. So we are selected this segment of stocks. We also need one more thing. we also need volume. So volume is also very important, because even though the implied volatility is very high, if there is no volume, there won't be buyers and sellers in the market. So volume is something very important. Look for volume. What happened? Volume. So here we have volume here. We say volume more than greater than 1 million. That's a very small. I also add option volume, not just the volume, but also option volume. Option volume, we get around maybe 10,000. Oh, that will be 1,000, 5,000. Yeah. Okay. So what you see here, it's still so much. So we need to narrow down. Option volume. What one thing we can do is to increase the volume. So that will be very high volume. Stocks are highly liquid stocks. Again, it's too much. We need to reduce it. Um, Implied volatility also very high, 80 plus. Okay, this is something that is manageable. Maybe we can also, okay, that should be fine. So here we have, and then another thing we can also do here is to have a chart here, and then you close it here. And now we see, uh, so let's take one of the high implied volatility. Um, One more thing actually I also add is the earnings. This is also get a very important upcoming earnings. So I also add this thing because you don't want to keep the stocks after the earnings. So until the earnings, people do not know what is going to happen. So the premiums will be very high, but after the earnings, it can go shoot up, shoot down. So just before the earnings, you need to close the position when you are option selling the options. So in that case, so you need to know when the earnings are. So I also add earnings tab here. So you see here, do not know why we have, okay, Google. So Google, I think it's both Google. You see, if you click here, you see the prices are very high. 96 is the implied volatility rank. So you see the volume here, and what is the driver here? So you see the driver here, 25th of April. Today is 18th of April. We have there is the earnings are coming, so the implied volatility is very high. So this is an earnings driven high implied volatility. You can see that. Uh, yeah, so you can see these different stocks with very high implied volatility, and if you click here at each one of them, you can see how this actually look very high change. People are buying, selling, because there is here, what is the driver here? This is on 24th. Again, this is more meta. Yeah, this is again earnings driven high implied volatility. So until now, what you saw is how to scan the market for to identify stocks with high implied volatility, and based on this, you could have your different types of option strategies, um, uh, based on your situation, your preferences. But here, what we did was to identify the stocks. So these are the stocks, potential stocks that could be used for where we can enter option selling, to leverage the high premium that we will get by option selling. Okay, so that's all for this session. Let's see you all in the next session on different another topic that I will take about option selling.